All right, we are officially live. We made it, finally. Okay, thank you. Thank you everyone for your patience. We had a little bit of technical difficulty, but that is certainly my fault and I apologize for that. But I'm happy that we were able to make it on for tonight's conversation about SBA loans for entrepreneurs and business owners with Maria Randall, who is the Vice President of SBA Lending at First Business Bank. So everyone, please give Maria a virtual round of applause. We can't see your hands, but that's how we get the energy up so we can get through this great conversation. I'm actually excited that I was able to meet and connect with Maria, actually virtually through LinkedIn. Right. So there are a lot of people who actually, I was on a coaching call today, and this is a big group of people who are getting coached. And there are a lot of people who still don't use the virtual space for business and for networking, even though they're in a position where their business could benefit dramatically from the relationships that can be formed through social networks, through technology. And a lot of times they're just fearful of using social media, when in reality, if you don't overthink it, just get into it, get started, and you never know who you'll be able to connect with and network with, especially on a website like LinkedIn, which is considered the world's #1 business network. So if you aren't using social media for your business and for networking, I highly encourage you to, because that's how I was able to find and connect with Maria. So welcome, Maria.
Thank you. Glad to be here.
Yes, no problem. So I'll give Maria a little bit of introduction, and then we'll kind of go from there. We've got a list of questions. If you have any questions while we're talking, feel free to put them in the comments. I am monitoring the comments section. So if you do have any comments, just put them in the comment section, or any questions. I'll do my best to catch them. And I'll also do just a quick review of the comment section as we get towards the end, just in case I missed anyone. So a little bit about Maria. Maria Randall is a vice president of Bank, providing SBA loans to small businesses throughout the U.S. Prior to joining First Business, Maria spent over 25 years in the banking industry, working primarily with small businesses, providing loans and cash management services. She is an ardent advocate of the SBA's loan programs, as she has utilized them over the years to help numerous business owners start and grow their businesses, creating countless jobs along the way. Maria is a graduate of Vassar College. I hope I said that correctly.
Vassar.
Where she obtained a Bachelor of Arts degree in economics and computer science. She is a graduate of Leadership Prince George's, a former chair of the Alexandria Chamber of Commerce Small Business Roundtable, a member of the National Association of Realtors, and U.S. Women's Chamber of Commerce. And she has served on numerous boards of area organizations. And finally, Maria is a mother of twins and a native of New York City. She resides in Southern Prince George's County with her husband, an Airedale Terrier named Tyson. She is an avid sports fan and enjoys traveling, boating, reading, and movies.
You got it all.
Yes. Nice to have you. So, Maria, how did you get into banking, or what made you? How'd you get started in banking?
Whenever I've gotten that question, it's definitely one of those cliches where you stumble into it. I don't know that anyone chooses a banking career. I don't really know that occurs. I haven't met anyone who has yet. But no, I mean, I when I went to Vassar, I intended to study computer science, fell in love with economics, and then ended up doing a dual major. And the economics piece really caught my interest. And, years later, when recruiters came to campus in our senior year, I got recruited to a bank in Manhattan and in a management training program. And that got me started seeing all areas, mainly of the retail side of the bank. But because I was always working with small businesses, I was in Midtown Manhattan. So those were my clients that I saw every day. I found that my core studies in corporate finance and things like that could actually apply because some of these terms were familiar to me. And then from there, and the branch side of the bank sort of led to lending, and I got into small business lending. And oh gosh, I can't tell you when I did my first SBA loan like a while ago, but thought, oh, this is good. It wasn't a fun process then, but I was interested in it. And over time got a chance to work with another national SBA lender and really get some expertise about 15 years ago, I guess that was. Wow. And I've been hooked since then. So It's kind of been an area of specialty, and I have really seen, because I've done both SBA lending and non-SBA lending, traditional, conventional commercial lending, and the number of clients that I've been able to assist because the SBA program exists is just, the list goes on. And those same folks would not have been able to get conventional financing. So, so here we are.
So here we are. So that's interesting. So you've literally spent your entire career in banking straight out of college.
Literally.
Yeah, the computer science major turned banker.
Yeah, exactly. But it kind of fit because the high school I went to was in Lower Manhattan, and you had to major in a business career. So my business career was, computer science, but I was down in the Wall Street area. So I always had that, connection to businesses there. So, sort of found my way. So I didn't really choose the career. It just kind of happened.
So it sounds like if you went the computer science route, you actually would have been kind of out of your area of expertise, your comfortability, because that's a little bit different. I don't know if I could see myself doing computer science, and I'm a business guy.
Yeah, exactly. It ended up being like way too technical for me, and so I thought, well, I like this too. So fortunately, I was able to combine the two.
Yeah. And have had a successful career, obviously, and have helped a lot of small businesses. It's interesting that you said a lot of the businesses that you've been able to help would not have been able to receive the help without the opportunity and the option of having an SBA loan. And right. I think that's an important point, because one of the goals for tonight is just to raise more awareness about the SBA as an option for funding. And what originally sparked the idea for me was because I was interacting with a lot of small business owners in various stages of their business and entrepreneurial journey, but they had the idea that they wanted to expand, but they weren't quite, the idea kind of proceeded before some of the more technical aspects. And so SBA as a source of funding just came up in conversation. And once I started looking into it a little bit more, I found that it was a great option to just kind of, even from a referral and recommendation standpoint, to be able to refer people to the SBA as a potential source for funding. So that's good. So you have a lot of experience and involvement in organizations. So I wanted to ask you a little bit just about, from your perspective, how being more involved or getting involved with organizations, nonprofits, whatever type of organization it is, why that may or may not be important for a business owner and an entrepreneur, and should they consider taking a more active role in their community as business owners?
Oh yeah, I'd say absolutely. Because what you find over time that a lot of business gets done because of the relationships that the two parties have with each other. right? Because everyone's got products and services, but there's got to be a rapport and a relationship established, because when people, there's risk on either side, and you want to be able to establish trust, and you do business with people that you trust. And so the networking opportunities, and most of them still are just virtual now because the lingering pandemic, but still networking opportunities are definitely things to be taken advantage of, because you still want to have those connections. And so thank goodness for Zoom and Teams. Yeah. And all of these others. I definitely encourage business owners to get involved in organizations. Most are having still virtual meetings or hybrid things or things like that. I used to be a member of the National Association of Women Business Owners for years, and then changed roles, and the pandemic hit, but I recently rejoined. And we do networking in the morning. There are some in-person events, and you can indicate by the color of your wristband whether you want hugs or you want people to keep a little distance. But yeah, exactly. But no, but it's important to have that connection. And I think for people to see you and put a face with a voice, and things like that. So I definitely encourage it, and utilizing the means that we have now, which are mostly virtual.
Mm-hmm. Yeah, and I'd piggyback on that and just say, also consider taking a leadership position. One of the things about being a business owner and an entrepreneur is developing and cultivating your leadership skills, and volunteering for trade associations or community groups gives you an opportunity, not just as a member, if you volunteer, or even if you're a member, if you volunteer to take on some type of special project or something, it's a good avenue for you to develop your leadership skills at a very high level. So for example, after a couple of years of involvement, you may have the opportunity to sit on the board of an organization. And by sitting on the board of an organization, that gives you a much wider perspective and understanding of business relationships, networking, and seeing how things come together just on a higher level. And just as a FYI, whatever industry you may be operating in, or whatever industry you're interested in, there are trade associations, there are organizations that are specific to that industry, sometimes specific to that role, and their job is to advocate on behalf of the industry, or to advocate on behalf of the position. So if you aren't involved, at least from a membership standpoint, you may be missing an opportunity to stay on the front end of knowing what's going on in your industry, what's happening, what type of changes are being discussed. So just being a forward thinking, or really adopting that visionary role as a business owner, it gives you an opportunity to really know about things that are happening before they kind of hit the common newspaper or what have you. So I highly recommend extracurricular involvement. So we've got a number of questions, and we'll try to get through some of the technicals a little bit, but I wanted to start off and just ask you, what types of businesses do you typically see using or securing SBA loans? Is there a specific industry that you see more of, or a type of service or product business, or what do you think you normally see?
A wide range. We are at First Business Bank, SBA lending, we're generalists. So there are some SBA lenders who focus on certain verticals, but we're generalists. But I would say I see a lot of franchises, because quite often franchise businesses, that's where you get your startup funding, is with the SBA's guarantee. Lots of service businesses, because in traditional conventional lending, as you want higher dollar amounts, there's typically going to be a collateral requirement that sort of climbs, as the dollar amount climbs. And as we know, service businesses, whether you're, a marketing firm or professional service, you're not going to tend to have that much physical equipment as such that would be available for collateral. So I'd say we do see more service businesses, but then again, SBA loans can be used to purchase equipment, heavy equipment, things like that. So I see a broad range, really, not really, one particular industry over the other, quite honestly.
Well, you did bring up a couple points that I do want to touch on. So you mentioned franchises. So that means you probably interact with, or you're familiar with, the IFA, the International Franchise Association,
Sure.
which is a great opportunity for people who are looking for a system, right? We have different types of business owners or different types of entrepreneurs. You have the type of entrepreneur that has an idea and they want to build that business totally from scratch. And you also have the option, or the type of entrepreneur who wants to buy into an existing system, which is a franchise, and become an owner, operator, or franchisee. But there are financing mechanisms that will allow you to purchase a franchise. And I'm assuming you don't have to already be an existing franchisee in order to qualify for these types of financing. So you can actually buy a business, an existing operating business, or even open one. I won't say with limited experience, but what is kind of the experience background or requirement for entrepreneurs who may want to look into franchising?
Well, generally speaking, the SBA has a requirement for the business owners to have at least 3 years of direct industry experience, right? But that the ideal being, you own one franchise location, you've ran that specific business, and now you're opening your second or your third, right? But I rarely see that. I do see it, but that's not the most frequent request for franchise financing that I see by any means. Typically, it is someone just maybe they're switching roles. Maybe they've come out of corporate America, or they're retiring from a government position, particularly in here in our area. And so what happens is it's a matter of making the case. And this is always part of my initial conversation with a client, that you really want to make the case in your business plan about how these particular skills and experiences that you've had over the course of your career, and whatever it may be, how they translate into your ability, to run this proposed business successfully. And so, if someone has in their prior role, they are doing marketing or operations management, or things like that, and maybe they have had, let's say in the case of a franchise restaurant, they have, maybe worked in the restaurant setting before, and maybe they have someone else who is going to have even a small ownership percentage that's had some business ownership experience or restaurant ownership. You can put those together toward meeting that particular SBA requirement oftentimes. Or maybe we frequently will see, I don't know, we might have seen like a dentist who they decide they want to open a franchise on the side because they've done this. Well, operating a dental practice is not the same as, a Dairy Queen or something like that. No, but there are certain skills and that you need to utilize in running that practice, that you can understand how that would transfer over to, running this particular franchise business. And the fact that there is a system is a thing that lessens the risk to the lender, because, it's just a matter that, okay, you have these business skills, and if you follow this system to the letter, this is what can be expected, which is why franchise startup loan requests are considered a little less risky than starting up a non-franchise business, because you don't yet have a proven method. You don't know that this concept is going to work. But I said a bit more than the 3 years that we look for, but You got me started.
That's a great insight, though. That's great insight because you gave us just inside look into just the journey that. So for the platform, I have a lot of friends who are entrepreneurs. I have a lot of friends who are part-time entrepreneurs, full-time entrepreneurs, folks who are in corporate America and want to get out of corporate America and become entrepreneurs. So the discussion, the information that you gave was extremely valuable because the emphasis was on how to translate skills, how to translate experience. Even if you don't have the full 3 years of experience, there are ways for you to counterbalance that through partnerships, bringing in a potential partner who can help give that balance, and also just the importance of being able to make that case. If you can make the case, right? If you can make the case, you have a strong potential or a strong opportunity to be able to fulfill what is essentially a dream for someone. They want to start a business and they can't figure out, or they don't think that they can, maybe because, hey, where am I going to come up with the money? But if you can write a business plan, if you can state your case, if you can bring in added resources in terms of knowledge and experience, none of those things cost money. And then there is a funding source that you can go to that will potentially provide the funding that you need for you to get up and running. I think that's valuable, extremely valuable.
Absolutely.
Yeah, so making the case is really a big part of the equation. So you and I had talked before about the business plan. And when people hear the word business plan, some of them, their eyes might roll back.
Some go running.
Yeah, some go running. I've had some of those. It's funny, but it's not funny because as part of just my interaction with people who want to lease space, I give them, upfront, here are some of the things that you'll need in place. And oftentimes it's the business plan, and then I never back from them. I literally, I never hear back. And it's one thing to, even if you have a side hustle and you've been operating this business for a while, it's still important that you're able to articulate your business plan and your business strategy to someone else via the written word. So can you just shed a little bit of light on just how extensive the business plan needs to be, and some of the things that you might want to cover, or even resources where people can go to find out more about preparing their business plan in order to secure funding?
Yeah, I mean, I would say, you hit on it. You talked about being able to convey your vision in the written word, right? And I often say to folks, you want to be able to articulate what you see so that the reader can get a vision of what this business is going to look like and these things you are going to propose to do. It's one thing to be able to articulate it verbally, and that's great. You want to be able to do that. But I always say that everyone who may weigh in on your loan decision may not have the opportunity to speak with you, to get that. So the extent to which you can convey that concisely to the reader in a business plan is invaluable. And I think one other thing that's critical that people realize is that, just the same way that you may prepare one resume to go for this job or another resume for a different one, or for a volunteer position or something like that, there's different versions of a business plan, right? And you want to make sure that your business plan speaks to the target audience. So we're lenders, and we do want to understand how you came to start this business. But if you spend several pages discussing your childhood dreams and how you led to this before you get to the numbers, revenue streams, what expenses you project, how will the loan be repaid, then you're going to often lose, lose the reader there. So I always recommend to folks that, why not talk to the banker that you plan to submit your application and get an idea, well, what kinds of things are particularly important? What things do you want to see? What do you not care to see? I often see a lot of people, let's say they have an idea for a business and they know that over time they want to spread to 10 different locations in these states. Well, if you're looking for funding for this initial location here, then that's what you want to focus on, because these future plans to put locations all over aren't relevant to the repayment of this loan. So I think understanding that, a lender needs to know, okay, what are the costs? How did you get to this number? How much of your own funds are you putting in? How much do you want to borrow? How do you plan to repay it? What are the details? Those are the things that our lender is going to zoom in on, because those are most key to making the loan decision. I would say in terms of resources, I always recommend the small business development centers, because they are all over the area. Every state will tend to have multiple ones. They're usually affiliated with a college or a university. Excuse me. And at the small business development centers, which are SBA sponsored organizations, they will not write your business plan for you, but they certainly will critique it. So you can bring one in that you've put together, or you've had assistance putting together, or whatever, and sit down with a counselor and say, give me your thoughts. Does this work? And they can help you to cut this out, add this in, that kind of thing. So they tend to be an excellent resource for that type of assistance.
Yeah, that's good to know. And so what I hear you saying is, one, leverage the relationship that you have with your banker or with your SBA lender. Stay focused on more so as far as this version. One, there are multiple versions that you may have for your business plan. Mm-hmm. And in order to secure funding, you want to use a business plan that's more geared towards the end user, who is the lender, the financier, the banker. And then that version, you want to focus a little bit more on the numbers and how the loan is going to be repaid, and how the revenue is going to work. And then leveraging the relationship that you have with your lender to be able to critique and to prepare that business plan, so that when you actually submit it, the clarity and the conciseness is there. Because again, you may not have the opportunity to meet with the broader group of decision makers who are going to make a decision about your loan. And then in addition to that, there are SBA sponsored resources across the country to help you with the development of your business plan.
Absolutely right. Absolutely. And I couldn't emphasize enough that piece about talking with the lender before you submit the application. Mm-hmm. Because, some folks will say, well, I want to wait, I want to get everything together. No, use that. I encourage those kinds of phone calls and emails all day long to get an idea of what we are looking for, because then, it makes the process easier all around. If you understand what kinds of things are going to be important for us to see, like we're going to want to know what forms of payment, what repayment terms you offer, things like that. But you may not know that if you don't ask the question. So I definitely encourage that.
Which is a great point too. Don't go it alone, and you don't have to go it alone. I've had instances where I've recommended and referred people to the resources that we've discussed, and their response was, no, I got it. And it's like, okay, I haven't heard back from them either. but there are resources available to help you with this stuff. And as Maria said, even getting your lender involved early on, they welcome the opportunity to be able to help you critique your business plan as well as the various resources that were mentioned. So I have another question. This is one I was thinking of when you had mentioned service businesses and the type of businesses that you generally see. And this is a question, we might be too far, we might be ahead in terms of where we are time wise, but cryptocurrency is a big thing right now. And I know that some businesses are using crypto and investing in crypto as a way to shore up their balance sheet. So my question is, for a service-based business that may not have a lot of physical assets on their balance sheet, are you seeing where the small business is coming to the table with a crypto investment balance on their balance sheet? And if not, do you have any insight or perspective of how that might play into the business being able to secure financing?
Yeah, that's a good question. So I have not yet seen one where cryptocurrency was on the balance sheet of the business. Mm-hmm. I did assist a borrower last year who was expanding another nail salon business, and on his personal financial statement, he had significant holdings in cryptocurrency, but I have not yet seen that on a business's financial statement. And I'll say this, the SBA is a government agency, and the programs, the lending programs, are all governed by the SBA's standard operating procedures. And so all SBA lenders follow that procedure. It is not necessarily very quick to be revised to keep up with some of the things that are now becoming commonplace. So I don't know that we'll see something like that for a while. It's still like, we love real estate as collateral. And to some degree, marketable securities can be pledged, but there can be, difficulties in getting those pledged. So a lot of banks sort of steer clear of those. So I think we would probably be a ways away from seeing a loan be able to be collateralized with that. And those are just, my thoughts. Hopefully I could be wrong, but it seems like it would be a while away. But the reason that I say that is this. So, how long has it been that there have been shared office space arrangements now? Right? Where you don't have to go necessarily and lease a whole building. There are all kinds of shared workspace arrangements where businesses can move out of their home and do one of those. And the SBA guidelines still haven't necessarily caught up to reflect that. So we still will look for, lease agreements and things like that to document our loan file, or have to make a specific, explanation that no, they're not actually leasing space. They're doing this because it's considered an exception to what the rule is. So, so change occurs. I don't know how quickly it will occur for cryptocurrency.
Yeah. And in the banking world, or just the finance world in general, I think is still figuring out how it wants to respond to crypto, and of course the regulations behind it. The federal government is still figuring out regulations and how they're going to police crypto and everything going on in the crypto world. But yeah, it's interesting. I was just reading some articles last week about some companies now using crypto as an investment strategy to shore up their balance sheets. So I thought that was interesting. So how about another question? Is there a minimum loan amount for an SBA loan and a maximum?
So the SBA doesn't set a particular minimum, but each lender is able to. So for example, our minimum loan amount is $350,000. I know of some SBA lenders that will do $250,000. Some Well, a community bank that does SBA loans can have their own limit. I can remember doing a $75,000 SBA loan when I was at a community bank doing SBA loans. So no real minimum there that the SBA sets. Maximum for the program, at least for the SBA 7A program, is $5 million. Under the SBA 504 program, which is typically more often used for real estate purchases and things like that, you can get to a much higher level because there is the participation of both the SBA as well as a separate lender. There are two loans, so you can get to much higher than that 5 million mark.
And I'm actually glad I asked that question because you brought up something that's a good distinction. There are different financial institutions that you can go to that have different requirements in terms of the loan amount. So a community bank, so if you go to a bank and they say, hey, the minimum loan we'll do is 250,000, that doesn't necessarily mean you're out of options. It
Right.
just means you have to find another bank that will that has the parameters that will lend at a lower amount. And one thing I found interesting being in commercial real estate now is just how many banks there are, and banks that you never hear of.
Never heard of?
Never heard of. Yeah, I mean there's so many financial institutions. It's really interesting because you typically only think of the bigger banks, and you may see a smaller bank in your local community, but there are
Right.
just so many different types of banks and financial institutions that are holding deposits and lending out money. So that actually leads to my next question. Can you go to any bank to secure an SBA loan? Can you just walk into any bank, or do you have to go to a certain bank?
No, so there are some banks that just do not do SBA loans, but that's their own individual choice. I think any bank can do one if they are, as long as you're following the guidelines and that kind of thing. There is, though, a designation that banks who have some expertise and do a good deal of SBA loans will gain, which is the preferred lender designation, which we have at First Business Bank. And that particular designation basically allows the bank to make the loan decision on behalf of the SBA. And so it streamlines the process a bit, because the SBA is essentially, vetted the bank, its lending practices, the lending personnel, and that kind of, and the knowledge and ability to apply the SBA's SOP to its underwriting, and it's a designation that a bank has to consistently, approve itself to renew that preferred lender designation. But banks who are not preferred lenders, yes, can do an SBA loan.
Okay, that's good to know, because I think I was thinking there are certified lenders, but I think the proper title is preferred lenders, and
Okay.
you become a preferred lender based on all of the information that you gave us. And just from a general conversation standpoint, if you are looking to secure an SBA loan, it may be a good idea to go with a preferred lender, because you're probably going to dramatically increase the likelihood that you'll be able to secure the funding that you need for your business. And I just say that based off of, my own real estate experience, and, the different nuances of working with lenders who don't typically do the type of loan that you're looking for. It can create more challenges, or create challenges during the underwriting and the processing and the closing process. So it's always good to go with the lender that has adequate experience doing the type of funding or financing that you're looking for. Would you agree with that?
Oh, I would 100% agree. And I think that the having the preferred lender designation is one thing, and also having a specialty in that, because if the and I'll use us for example. I'll blow our own horn for First Business Bank. So all in our SBA lending division, literally all we do day and night is SBA loans. So every underwriter, every closer, everyone involved in the process does only SBA loans. And so what that does is, I think, takes you to a higher level of knowledge of the process, of the programs, of what things will be okay with the SBA and will fit and what things won't. And when you have that kind of expertise, you can ward off a lot of things early on, and you can better prepare the borrower early on for what kinds of things to expect, right? So before there's a lot of time wasted and the loan request ends up being ineligible, or if there is something that is going to be a requirement in the closing phase after we've done the application and we've been through underwriting, we can talk about those in the beginning. So I can tell you, on day one, okay, and you're going to be leasing space, make sure you and your landlord have a good rapport, because before closing, they're going to need to sign a landlord waiver agreement. So you just, or make sure that, your contractor has this or that. When you pick them, don't just pick them based on price, because when it comes to time for the construction to be done and loan proceeds to be dispersed for that construction, they're not getting a lump sum up front to complete your project, right? It's going to be dispersed over time. So things like that we can talk about in upfront, because we've seen these loans before, we've done them, and all of us can speak to what kinds of experience you will have through going through the SBA loan process for this particular purpose. And it's not, it's a very detailed process. It's sometimes, I think, it perhaps can feel intrusive, but there's a lot that has to be documented, and but it's a government program, so there's documentation that of necessity is part of that. So so I definitely think it does help when you are working with folks who really know this and aren't having to go and look up every answer to a question that you got, but they already have it.
Mm-hmm. Yeah, that's a good point. You mentioned that, hey, this is a government program. So when you think about government, you may think of slow processing or bureaucracy, or jumping through hoops and hurdles, or there may be some negative thought that comes up. So whatever that negative thought is, you can counterbalance that by going with an experienced lender who knows all of the nuances of what it takes to get a loan through the government. So with that, what is even with the challenges or the detailed process and the intrusiveness of the process and everything that has to be documented, once the file is complete and underwritten, what is the typical time frame for actual funding and for a business owner to receive funding?
Well, so certainly with a preferred lender, once underwriting is done, the loan is approved internally, that's where the great benefit in terms of timing of that preferred designation comes in, because we simply notify the SBA, making this loan to this business for this purpose, and they give us the guarantee number associated with that loan. So we don't have to send it off to them. But then the closing phase, so going from that, that completed underwriting, a commitment letter has been accepted, and now we're trying to get to the closing table. Really, the timing for that tends to be most driven by the borrower. And I say that because typically there's a closing specialist on the team who will say, okay, well, here are all the things that we will need to document the file. So whether it's a final construction contract, or the, in the lease agreement, or it's confirmation that life insurance or other business insurance is in place, or appraisal reports coming in, or things like that. A lot of that, we are reliant upon the borrower to get us the information that's needed to get the loan documents drawn up and signed. So, I mean, I've seen it can be anywhere from 3 weeks to 8 weeks, may be the norm. And what we try to do, though, and I know, and a lot of folks will try to do this, we try to alert the borrower early on of what things are going to be needed. So, like, if you don't have a relationship with an insurance provider that provides business insurance, well, you can start having those conversations early on, you know, before your loan is approved. You can make that connection. You can make inquiries about, in case key person life insurance is going to be required, which often is for many businesses. So you can start those discussions or that process, you know, early on. There are a lot of things that don't have a cost to them that can be begun or looked into, rather than waiting till, okay, now we're, you know, approved and we're trying to do all of this to close. I mentioned key person life insurance. It's quite common that one of the approval conditions will be an assignment of a life insurance policy, right? If this business owner, if they are really the key to this business operating, and if, you know, something were to happen to them, there would be no business. And so depending upon, you know, what life insurance company you may use, we don't know what their process is going to be to provide an assignment, right? Maybe it's 3 weeks, and maybe things aren't electronic. They don't allow DocuSign. So it's got to be something mailed to the home office in Ohio, or, you know, whatever the case. So there's a lot of waiting in that closing phase, and it tends to be somewhat out of the lender's control how long things are going to take. So we really do try to let borrowers know as early as possible, and then rely on them to, you know, move these things along so we can get to closing as quickly as possible, because it you know, we are as anxious as they are to get to that table.
Yeah. Okay. Yeah, that's very, very informative. I can see, as you know, as we've been talking, just the list of items that continue to kind of add up, that you know, as part of this process. So for anyone who is thinking about, or may, you know, one day may think about utilizing the SBA as a funding source, having patience as well as being organized, having your business organized, and having your documents organized and ready, and being patient and also responsive, sounds like it will go a long way in helping with the funding process and the closing process, because there's a lot of stuff, and I'm sure we probably didn't even touch on half of it tonight. But right. I can tell that there's a list of things that the borrower has to have in place, as well as the borrower has to do in order to see that process through to the closing table. So,
and Kevin, go ahead. Because you said something that I definitely always like to get out and that people know, because you talked about preparing and being organized and that kind of thing. And that is one of the things that I have seen over time that will often, you know, stop the process for a business owner. And that is not preparing in advance to be making a loan application. You know, we are required to use tax returns for an existing business. We're going to be looking at the tax returns that have been filed with the IRS as the basis of evaluating the historical cash flow of the business and making the determination as to whether or not that's sufficient to comfortably support repayment of the loan being requested, right? So if this business owner has, you know, maybe run a lot of personal expenses through their tax returns, or done things to just try to minimize that tax burden, which you can understand, who wants to have a huge tax bill. You got to realize that then if you go and submit those same tax returns for for a loan request, we're like, well, there's a loss, and we're seeing, but we don't really see the cash flow here. All of these funds are going there. And so, you know, showing losses from one year to the next doesn't tend to give a lender a great, first impression of how the business is doing, because then you're concerned, well, the loss is going to continue, or are they going to, grow? How will the loan be repaid? So that's why preparing and planning ahead of time so that your financials look like, the best impression, the best representation of your business is really important to do, and will dramatically, I think, increase chances of approval.
And
So
you're
I just
looking
wanted
at,
to add that when you
oh
said
no,
that.
yeah, that's good. That's good. And you're looking at 2 years, 3 years of prior.
Typically three. Typically, I like to see three. Any if there are not 3 years worth of tax returns, then it's considered a startup, and it's evaluated as a startup request.
Which is actually a great question, because that if you could just tell us what are some of the differences if it's treated as a startup request as opposed to a traditional that we may not have touched on.
Oh, okay. Well, no, I mean, I think, so typically startup requests are going to be more heavily reliant on projections. We are going to tend to have to be more focused in on, well, what's the secondary repayment source going to be if the business doesn't, achieve its projected revenue and profit guidelines, which that becomes more important than a historical business that's already been, producing cash flow. We can rely on that, but without that, we've got to look at, well, is there an outside source of income to the household of the owners? What are the other ways that this loan can be repaid, just in case? Because we know, certainly that small businesses, there's a higher percentage of failure in the first, so many years. So knowing of another source becomes that much more important. You are already looking for other things that will help mitigate the higher level of lending risk associated with a startup business, quite frankly.
Okay, yeah, that's good information. All right, so let's see, it's 8:05. We got started a little bit late, but we kind of evened it out. We're finishing at a good time. So if let me just double check. I think we actually got through all of our questions and then some. So that was good. We made it through. So what I'll do, if it's okay with Maria, I'll just put her, if it's okay, I'll put your contact information in the comments.
Oh, yes.
Yep. So if for anyone watching now or who watches after the fact, if you have any SBA lending questions or potential lending needs, feel free to reach out to Maria. And Maria, are you able to provide service to anyone nationwide, or do you have regional coverage, or? Okay.
No, we lend all over the country, and I think I had said this to you, Kevin, that I am just so looking forward to that business owner in Oahu who, needs to meet with me in person. I'd love a reason to go back there. So, but yeah, anywhere in the U.S., we're able to assist.
Okay. All right, beautiful. So thanks again, Maria, for agreeing to sit down with us and have this conversation. Yes, it was very insightful, and I know a lot of entrepreneurs who can use this information. So thank you for enlightening us this evening, and hopefully we'll be able to sit down with you again sometime soon.
Thank you so much. I really appreciate the opportunity.
No problem. Well, everyone, have a good evening. Thank you for your time, and we'll see you next time.
Take care.